You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music can mean only one thing. It is time once again for TWIFO, This Week in Futures Options, the program where the name says it all. We break down the week that was and indeed still is on the futures options side of the fence. Maybe we'll talk some ag, some equities, who knows, fixed income, crypto. You never know. Metals, you never know. It's going to make it on the show. That's why you got to tune in every week. My name is Mark Longo from the optionsinsider.com, and we got a great crew joining me here on the old program. So without further ado, let's get to him. First off, our old friend, supposed to be in the studio, but he's got to beam in. Busy man, I get it over there. Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Also the holder of the longest business card in the business. Sean, welcome back to the program, sir.
Thanks for having me, Mark. It's great to be here. Another great show. A little crispy cold here in Chicago today. And that's not the reason I'm not in the studio.
You just didn't want to bring your delicious burgers. I know why you didn't come, sir. I know. I was all excited. I was looking forward to some delicious premium gourmet burgers, and then they were rudely snatched away from me. Luckily, I'm heading over to the STAC, Securities Traders Association event tonight, so hopefully they'll have some fun. Maybe a bacon station or two will be lurking over there. And I do believe, listeners, if the futures options gods are smiling upon us, I do believe we are joined once again by an old friend of the program, Mr. Nicholas J. Fury himself, a.k.a. Nick Howard, the founder and CEO over there at Quick Strike. Mr. Nick, welcome back to TWIFO, sir. Happy New Year, indeed. Happy New Decade to you.
I am back. What's happening? I was waiting for Sean to somehow be disconnected like old times, and the next thing you know, a gravelly voice that was all pixelated to come through. But here I am. I am here, and I'm muting myself. Thank you.
How is the new year? How is the new decade treating you and the crew over there at Quick Strike, sir?
Well, it's been a while since I've been on. Yes, we've been busy. Lots of stuff to talk about if we have time, and lots of stuff to point out for people to take a look at, and more things I think that you'll be able to use on the show in the future, just in terms of getting access to the stuff that's trading and looking at things more easily. So yeah, it's been going okay. We're excited to where we are, and just having fun as usual.
I like it. Well, usually I ask Sean this, but since you haven't been on in a while, I'll let you choose first. We like to start the show, some of the movers and shakers of the week. I know which way Sean likes to lean. I have a feeling I know which way you like to lean too, but we'll see. Maybe a new year, a new leaf. Maybe we'll find out. So which way should we start, Mr. Nick? Should we start on the dark side, so the bottom five, or the light side, the top five movers of the week, sir?
Well, I presume that you were going to expect I would say something about the Eurodollars, which is always moving and shaking. There's been a lot of trades there, and I'll gladly show you guys how to take a look at some of that stuff. I did tweet something out about Bitcoin, and we can start there if you'd like. I'm just a guest today, so I will be led by the leash to wherever we'd like to go.
Well, I'll tell you what, I'll pick then. I'll pick. So we'll go. It'll be fun. Sean always picks dark side or light side. So I'm going to pick dark side. I'm going to pick the biggest losers of the week to kick things off. Remember, you guys can play along with the home game. CMEgroup.com/TWIFO, TWIFO is the place to go to play along with all these fun reports to kick the tires on all the Nick stuff over there for yourselves over there. Number 5 to the dark side here. So the least loser of the week is Nat Gas. It's a quiet week for Nat Gas, off a paltry 2.05%. Then we got number 4, good old soybeans, off 2.15%. Got a feeling I'm going to have a pretty trade war-centric movers and shakers this week. Number 3, feeder cattle. Interesting, off 2.3%. Number 2, good old heating oil, 3.5% to the dark side. And number 1 with a bullet to the downside this week, soybean oil, off not quite 5%, 4.9%. And let's go up to the light side. The biggest winners, the upside movers for the week. Number 5, Sean, you may have heard of this one, something called the E-mini Russell 2000, up 2%. Has this one ever come across your radar, Sean?
I resemble that remark incredibly.
Did you mess around with our top 5 here to put Russell in there? Was that your work? Are you messing with our notes?
It's definitely a product of us bringing more awareness of that index to this customer base.
That's true.
No question.
That's true. I will take some small credit for that, but not for moving the index. That's up 2% on its own this week. Number 4, iron ore, up 2.2%. Number 3, platinum. Platinum's been an interesting mover up there along with our number 2. We'll get to number 2 in a second. Number 3, platinum, up 4%. Number 2, good old palladium, the biggest winner of the year last year. Good old palladium. It's up again this week. It continues to rock and roll. I think we talked before about some power outages in South Africa that's causing a lot of this upside movement. Either way, something continues to drive it to the upside, up nearly 6%, 5.9%. But that's not enough. Usually that'd be enough for the number 1 spot on the week. It's not enough. Lean hogs rocking and rolling to the upside, up 9.56%. So lean hogs rocking and rolling. So a lot of good stuff. Again, you can check all that out for yourself, cmegroup.com/TWIFO. But we got Mr. Nick back on with us. So I want to start, Mr. Nick. You may have heard, a little birdie may have told you, that a new product was launched this week. A product that some have been waiting for quite some time. Nigh on 2 years now, sir. We've been waiting for this product to be listed. We finally got it in our hot little hands. What was your take, Mr. Nick, here on the launch of the much ballyhooed, the much anticipated CME Bitcoin options on Monday, sir?
Well, I thought, all things considered, we had volume, right? And we opened up some strikes. So I thought that was a good thing. And I can go back, which I'll talk about. There's a new tool that's out there that's going to let you not only look at the block trades, but now we can look at Globex trades via Quick Strike. So we have that feed and we do some roll-ups. It's a very nice tool, but it allows me to go back and see what actually traded there. So we had some blocks on Monday, and then we had some other trades, some one lots. And I think my take on the way the stuff is traded to this point is, I'd say I'm glad that we got a lot of strikes open, so that's good. It allows us to take a look and generate some ball curves based on the premium that's printed. And I'm disappointed in that there are mostly one lots, and I think part of that and my disappointment is not. It's just that we're so used to seeing big size in other contracts, but I believe what's happening here is that contract size and that premium is so expensive that it's going to be difficult, I think, for unless we get down to that mini contract like we talked about, where instead of 5 coins, we go down to 1 coin. But all in all, I think it's a good start. I think the oddball thing that happened, I don't know if anybody was paying attention yesterday, but there were trades in the 70,000 puts.
Yeah, some really funky prints.
Really weird stuff. And it made me like my sketchy indicator went up, because it feels like almost that people were either trying to do some sort of, maybe somebody got filled on futures at a better price and they want to get out. I don't know what it went and just play on. They sell it and sit on it or whatever the case may be. But I think those are interesting to me, because 6 prints with 5 of the 6 being over $50,000 in price, with 1 being $40,000. So all in all, I think it's a good start. I think the markets are pretty tight. Interestingly enough, I think that the vol curves that we had going out there early on were pretty close, and that part I was glad to see that happen as well. So the meaning that we had added some tools to Quick Strike that allowed the person to view realized volatility on the futures price charts. So that realized vol and that the money vol were kind of tight in terms of, it was matching up pretty good. And then the skew wasn't exactly what I anticipated, or it was, but let me go to it so I haven't looked at it today, but let me go to it today and we can take a better look at it. So it looks, I expected the puts to be bid and the calls to be flat to the at the money, but right now we got a pretty good, I'd call it a smile for the most part. So that's probably a little bit of a surprise to me, but other than that, I think it's a good start, right? Getting some volume across the board, getting some strikes open, so that means people's eyeballs will be on it, and it looks like, if we look at the open interest on a thing, it's not a tremendous amount of open interest, but when we have open interest in Jan, Feb, May, and June. Small, but it's a starting point.
Awesome.
Yeah, it was interesting. An interesting run up to the products as well. Obviously, not just in the 2 years that we've been waiting for these, but in the week leading up to these, the futures were lighting it up. They were blowing the doors off. Monday, 6,600. Tuesday, 12,000. Wednesday, 17,000 5X futures listeners going up. Thursday's 10,500. Friday, 13,500. So going into Monday, the futures were lighting it up. They were hot and heavy. Everybody was expecting it was going to kind of blow the doors off it on Monday. And of course, we were doing our crypto show live on Monday, trying to parse some of the volume live, and we were having the darndest time trying to get any access to any prints. And I think it didn't help that CME tweeted out a link to a page that pretty much only linked to Friday's volumes. Obviously, there was no volume on Friday for the Bitcoin option. So people kept hitting us up all day. What's up with the volume? There's no volume. There's no volume. So part of that was, I think, their fault. So we were pleased at the end of the day to see some volume had indeed traded, because for the lion's share of the day, people kept saying there was no volume, and we knew that could not be the case, but we couldn't get our hands on exactly what was going up out there. Still, 54 contracts. I think a lot of people thought, hey, given that 13,500 of the futures went up on Friday alone, and that's a 5X contract, so they're both beefy, then you think you'd maybe see a little bit more. But at the end of the day, 54 is certainly better than 0. And we've seen some weird stuff. You're right. The deep in the money prints certainly flagged my interest here this week as well. Because, yeah, right, some sort of maybe in carry plays, deep in the money type, box type prints. You don't really see those too often, but something like that. Yeah, you're right. Way, way deep. That was not at all what I was expecting. So a lot of head scratching stuff, to be precise here, on this first week of Bitcoin options. The volume somewhat light. It existed, which was nice, but kind of light. And the stuff we're seeing later on in the week is deep in the money on a contract that's already pretty beefy. So a lot of fun stuff here to parse. You're right. And I've been looking at your skews here, Nick, and stuff, because we've been preparing for this day, looking at some of the other data we had for venues like Deribit and other to see what their skews have been like and what they've had. And you're right. This one's kind of weird. I mean, part of it obviously is it's light volume, but it's a smile. You're right, and that's kind of a little bit different than what we've seen on some of the other venues, where of late the puts were kind of leading the dance and the calls were kind of middling to maybe offered. We got a smile going on the CME Bitcoin options, so obviously a bid to both. We'll pay attention to that. I think as more volume starts to accrete into the space, we'll probably see that change and evolve a bit. But still, certainly you can't say it wasn't interesting. An interesting start to the week. So all of you out there who were hitting us up on Monday, what's up, what's up, what's up, where's the volume, where's the volume? It was there. It existed. It was just a little hard to find. I don't know, Mr. Sean, I know you got your nose to the grindstone over there in equities land, but did you have a chance to watch this launch of the much ballyhooed CME Bitcoin options? Were you glued to your screens like everyone else on Monday, sir?
I was, and I was talking to some CME folks, trying to get some of the numbers as I think the whole world was, because I'm very excited to see the launch of these options products at CME Group. So, yeah, I saw the 54 number as well. I think it's early days. I'm just really bullish on the whole product. So I'm excited for them.
What the problem was, Nick, was that CME tweeted out a link to their kind of historical data page, which is obviously a day behind. They should have tweeted out a link to your stuff, Nick, that people could have seen it all live on the spot. What do you think?
That's absolutely right. I mean, there's a whole new section out there that we released at Quick Crypto that's inside of the free stuff, Quick Strike Essentials, as well as the regular thing, where it's targeted towards the CME futures as well as the index that is driven off of the 7 or 8 exchanges that the CME is tying to. But in any case, it still feels, to me, this finally legitimizes the Bitcoin stuff, because I would never have trusted any of the Deribit trades or any of that kind of thing, just because it just feels so unregulated and so sketch that it just made me nervous. And I don't know if you noticed that news earlier in the week where it said Deribit was moving from some, I don't remember if it was Denmark or something like that, to some South American country because of the regulation the EU was going to have in terms of what kind of information you had to gather on the people that were opening accounts there. So all those things kind of just make me nervous. The fact that it's here on the CME, you're seeing it's good price discovery, like you mentioned, good volume. Now we have options with volatility levels that are, that are reasonable, and we get in good markets. The sizes are one-ups on these things, but when I'm out here looking at them, I'm looking at 6 by 5, 7, 5 by 5, 3 by 3, 1 by 1. I think those are all good. Given the size of the contract, I think all in all, I would love to see a smaller contract with bigger size trading, but I guess it's all irrelevant, right, when it comes right down to it. But I still think I still think we're going to see a mini and a micro future at some point. I just don't know when.
Yeah, we're going to get Tim McCourt back on, and I'll hold his feet to the fire. I've asked him about that in the past on the future side. It definitely seems like we need one on the options. Of course, that'll go hand in hand probably with the future as well. So they've had a good success with the micros, so they like small these days at CME. So it does seem like maybe we could.
No, can you imagine if they had like a tenth of a Bitcoin future, a micro, and a tenth of a that thing would go.
That'd be huge. Yes.
Oh gosh,
that'd be huge.
It'd be crazy.
In fact, the same. Yeah, there was other people launching stuff that were tenth around that same time. So it is fascinating to watch. But you're right. This is. And I know people in the crypto space hate this, but when I say this, but at the end of the day, this is what the space needed to really become and evolve and take the next step to become a quote unquote big boy type of market, right? I've been saying this for a while. Deribits, all these other places, the Binances, they're all fine for the overseas audience, but U.S. audience, you have to tunnel into them with a VPN. You're violating the terms of service. It's not at all an experience anyone could recommend to someone. On top of that, they're not regulated. The clearing, who knows, counterparty risk. Here you have a listed, regulated venue putting up things that are cleared. There's no counterparty risk. This is what the space really needs to take the next step. So hopefully these products will start to resonate. All these venues out there putting up crypto-type products, hopefully this will start to resonate here. The listed ones give regulators a little bit more insight into what's going on out there, so maybe they'll be a little bit more favorable here in the U.S. when it comes to this product category going forward. So these products, we need this kind of thing to succeed. If you're interested in this space, if you want to see this space move forward beyond these overseas entities, you have to tunnel in with the VPN, and the regulation is all sorts of crazy. If you want to move beyond that, get a real kind of quote-unquote experience, then hopefully these things resonate. Maybe we will see some micros, and that'll help continue this. I'm looking at your SKUs right now, Mr. Nick, and you're right, it is kind of interesting here. You can check it out for yourself. If you go into the Quick Strike listeners, there is a new tab up top, Quick Crypto. Do you want to give us a really quick rundown, Nick, of what they can find on Quick Crypto, sir?
Yeah, sure. And then, I also have another question for you. I put it in chat, but I would like to address that with you. So what we've done in Quick Crypto is we give you access to the actual index that that drives the future, and you'll see price discovery there. So we have all of the history that's available, so you can go over there and get it. And we also do the volatilities based on that real-time index. And then we also have some different sections that would give you a different look at volatility. We have daily changes, which is your typical ways to measure realized, but then we were doing 60-minute changes and 15-minute changes. So we basically took the same number of 60-minute changes that you would take in a daily change and the same number of 15-minute changes that you would take when you're doing a daily change realized vol, and tried to create like two measures of short-term volatility. Those were built specifically for when things were just wacko, a year and a half ago. So they may not be as exciting as they once were, but it's a nice way to look at the at not only the Bitcoin real-time index and realized vol, but we also have the Ethereum is up there as well. So that's really it just gives you a place to go see the price and to see some volatility information. And there's also some theoretical pricing sheets based on that realized vol and how we see the skew in terms of the price distribution around it. So it's a neat little tool, and it's specifically tied to the things that the CME is using. And who knows if they have enough success with the Bitcoin, maybe we'll see an Ethereum future, and shortly after that, some Ethereum options. I mean, in the end, I guess that's kind of I'd like to get you guys' feedback on that. I'm still, Sean, I don't know. I don't feel like this is a real currency yet, because I just don't know that I would be comfortable doing anything with it from a purchase and sale standpoint. I don't know. That's just my take on it, but who knows?
It is kind of hard, right, to use it as some sort of reliable currency when it does have the volatility has tamped down a bit, but it is still pretty volatile. Imagine your dollars in your pocket ebbing and flowing at, a 60 to 70% volatility. That certainly makes it challenging to use it as a reliable source for purchasing and selling goods. That's one of the challenges out there. And you're right, the Ether stuff is kind of interesting. That's something that CME was hinting at for a while. They had talked about updating their reference rate. So for a while there, when I kept bugging them every couple of months about when are we going to see the Bitcoin options, they would say to me, hey, look at the ETH reference rate that we're updating. That made it seem like they were leaning more towards more futures, in particular ETH futures, before they were listing the options. So I'm glad we got that. And you're right. I think we can all have questions about a lot of these crypto underlyings from a long-term viability perspective. But for a lot of our audience who wants to trade them, there's volume, there's volatility, there's growing volume on the options side. It's starting off slow, but it'll get there. There's pretty sized volume on the futures side right now. There's a volatility. All you've been asking us for years, what will the skew look like? There we go. We got an actual skew now that you could look at. So this is answering a lot of the questions that our listeners had. Speaking of questions, I know you guys have more. We'll get to those in a little bit on the futures options feedback segment in a little bit. I know we could talk crypto probably most of the show. We got to keep rolling really quickly here. Let's head on into equities land next, because I don't know if you know this, Mr. Sean, but that number 5 on the downside, that E-mini Russell 2000, I'm still looking at you, sir. I still think you added that in there. Are you not fessing up to anything?
It's small caps are that class of stocks that are making that move. They were behind in terms of performance, but I think that was an indicator that a domestic kind of tariff insulated U.S. 2000 stocks is an index worth paying attention to and investing in. So I think that's been the real driver. That, along with just the market itself, has just been on a rally, right? So I'm just very excited to see the move, but I'm also very excited to see the volume in the futures and options along with this move in the stock. Vols come in when markets rally, but we're seeing volumes increase. So I'm very excited to see it.
Yeah, let's see what we're seeing out there in equity land. As always, you guys follow along, cmegroup.com/TWIFO. Coming at Showtime, our old friend, the VIX Cash, coming in a little bit. Of course, we are post-trade war in the broad market, listeners. So apparently all that Sturm und Drang for the past 2 years, it's all behind us, all smooth sailing. The market liking what they're seeing. Most of the major indices rallying up around 2/3%, 0.6%, somewhere in that range today. And VIX Cash, most of the vol out there, taking a bit of a break today. VIX Cash down about around 12.25, a little bit less than that, about 12.20. That puts it down about 0.75 of a point from where it was this time last week. Our old friend VVIX, a.k.a. the volatility of volatility, right on 89.25. So coming off a bit after having threatened that triple-digit level for a little bit. So not quite super elevated, not quite cheap. It's kind of in that, I guess you can call it that frothy level, the vol of vol out there. And our old friend RVX, a.k.a. the VIX of the Russell 2000, at about a 14. That puts it pretty much down about a point from where it was this time last show. And that whole spread, that VIX RVX spread, is right around, not quite 2 points, about 1.8 handles, which puts it actually pretty tight. I know usually it's north of that 3 range. So that's actually kind of interesting. I don't know, Sean, as you've been out there doing your road show and chatting with the folks out there, has the kind of tightness of this spread lately, it's been around 2 or even tighter for the last few weeks. Has this come up in any of your conversations? Is this driving any people into the product? Because I know when the spread gets tight or when it gets really wide is usually when their ears start to perk up, sir. What are you seeing out there, Sean?
Yeah, they're definitely talking about volatility coming in and this spread tightening, and that so many people watch the range of this spread between volatility between small caps and large caps. So this tightness is getting to the point where people are looking to put on that volatility trade. Now, in regards to RVX, you have to go into the RUT options at CBOE to capture that volatility versus VIX in the S&P. So just be aware that future hasn't started trading again, and client demand is really driving CBOE to bring that product back. So hopefully we see it.
Speaking of bringing products back, maybe all this action in CME Bitcoin options will cause CBOE to want to get back into those waters. We shall see. They kind of had an early exit in that space, but I know they are still watching it. So who knows? Maybe they'll want to get back in. Then we'll have even more listed options products on the Bitcoin front to arb and get back and forth with each other and all that good stuff. But listening to what's trading out here, let's go on out to FTSE Russell land right now, see what was lighting it up in the Russell 2000 this week. I know it was a down week, even though we're all looking at Sean as the reason for that. All right, let's look at here the week 3. Yeah, look, the Jan week 3 contract, 1690 calls are where the action was this week. Russell 2000, coming into showtime, actually getting a little bit of that back now. Is that north of the 1700 handle? Wow, so this is, for a long time, the narrative in Russell 2000 was it can't break 1600, can't break, forget about it. And now, not only is it north of 1600, north of 1700. So 1690 calls leading the dance here this week, which is a little bit of a change of pace. If you've been listening to the show for a while, it's kind of farther out of the money. Puts have been the lion's share of the action. This week it seems like it's upside calls, so maybe a bit of a vertical. 1680, 1690 on Tuesday. Looks like that went up about 700 times total in the 2. So interesting. Maybe that's a bit of a roll, maybe a bit of a vertical. Either way, some funkiness. Tuesday was the action day out here for all this upside up here. Interesting stuff out here in Russell land. Yeah, interesting stuff. And I've been heading down to a securities conference all week here in Chicago, and Russell has come up a few times. Folks are generally intrigued out here about what's going on in small caps, and this week certainly is interesting stuff. Mr. Nick, since you've been on your hiatus, you've been enjoying your glorious respite out there, developing stuff in Quick Strike. Have you been keeping an eye on the land with small caps, sir, since the last time we chatted, sir?
I've been watching in general and just waiting for this whole equity market to stop going up for no reason. It's obviously, and anybody who's in it is benefiting from it, but it's still just not, don't understand it really all that well. I will say that I have a much better idea what's going on in those contracts now that we have the new tools available. It used to be tough to see exactly what was trading, but now with something I just tweeted over there, we can quickly see where the activity is. And again, I know Sean's happy with the volume in the futures and the options volume is picking up. It just what I still don't understand. Like I'm looking at the Russell now today, and the largest options trade was a 73 lot in a week 4 put, but I just don't. This is a number this is a better number than the Bitcoin future index. I just don't understand why this doesn't trade. And it moves. So for me, it's just like if people want to trade and they're trading a product and a product that they know has got a handle on it because it's a legitimate index on a great future, I just wish I would see more options on this because it just seems like it's a place for people to get started at the retail level, at the professional level. I just wish there was a little bit more volume there.
Sean, what are your thoughts on that? You're out there doing the roadshow, sir, out there spreading the gospel of all things RUT options to the masses, sir. What are your thoughts on the continued evolution of the volume out there?
I agree. And it's why the SIBO and CME and their options product are both out there trying to grow these products in a big way. So I'm very optimistic. I think small caps are going to get a lot of attention this year. They're being discussed almost every single day on CNBC, small versus large cap, and value and growth and the other areas within the market. But yeah, the Russell 2000, I think 2020 is going to be a big year. So our exchanges are both expanding their outreach to various sectors of the market, that in retail and also in institutional investing and trading. So I'm expecting to see all types of new activity and some big activity in small caps again. So markets are cyclical. I think this is something cyclical, and I think volumes in the Russell 2000 are going to come back to the volumes that they were not too long ago.
Speaking of volumes, we had a big trade war week this week, so we have to go to the land of ground zero for the trade war. I haven't checked in on them in a little bit. It's the old beans, as you mentioned on the top of the show. Soybeans were some of the big movers of the week. Soybeans themselves down 2.15%. Soybean oil down nearly 5% on the week. So kind of a big drubbing here for soybeans. Maybe some folks not overly enthused with the details. People have been nitpicking this phase one of the trade deal for a while here. And one of the big agreements was, of course, them buying more agricultural products from us, a.k.a. more soybeans. Of course, China has still been buying soybeans from Brazil. People taking issue with that. People saying maybe some of the promises they're making in this early round of the trade deal are going to be hard to deliver because they weren't buying those levels even back in the pre-trade war time. So there's a lot of irons in the fire there that have to be sorted out. Still, the beans feeling the heat coming into showtime now. They're off about 2.25 here, right around that 9.25 level, pretty close to it. Off 21 handles on the week. So not a good week out there in beans land. Vol also coming in across the board, which may be counterintuitive to a lot of our equity-focused listeners. But again, this was kind of a big event week. When you see the event happen, you're going to see the vol kind of come in as a result. So vol getting pretty much drubbed across the board. Those nearer-term contracts, vol coming in multiple points as you go out a little bit farther beyond March and beyond. It comes in a little bit less, about a point still. But still, vol coming in pretty aggressively across the board. March was where the action was this week, nearly 38% of the paper going up. In March, let's see what was going on out there. 940 calls, so a little bit of upside going up this week. Again, we're at about a 925 level in the futures there, listeners. 940 calls are where the action was this week, doing about 8,500 contracts. The lion's share actually today, 3,000 and change, 2,300 on Monday. Most of that opening throughout the week, too, which is kind of interesting. You might have thought maybe with the retreat in soybeans that perhaps would be some closing upside. Nope, it was opening upside, which is kind of interesting out there as well. Number two are the 940 puts, so that 940 strike obviously had some magnetism to it this week. And that one was kind of scattered throughout the week as well, so it wasn't like it all went up on one big print, maybe a straddle or something like that on one day. It was spread out throughout the week. They did about 7,500 contracts out there as well. 900 puts, so the par puts also doing pretty decent volume, about 7,000 of those. Let's scroll out a little bit to see if we can find any more funky prints. Actually, 920 puts out there in the Feb contract, doing about 7,000 contracts this week. And if we go all the way out to the end of the year here, no time frame, seen about 1,500, the 1020 calls, if you like. Some really far upside, if that floats your boat. Par calls out here also going up here earlier. It looks like around middle of the year time frame here. So interesting stuff here. Not exactly a ton. Let's go out here to the skew. There we go. Skew last week, puts were about 4.8% cheap to the at the money. This week, they're 7.3%. So puts coming in a little bit. Again, we're seeing that vol get annihilated, so that's probably accounting for some of that. The calls kind of unched, which is kind of interesting. They were 8% rich to the at the money, so the bid was clearly to the calls last week, and it's still to the calls. It's 8.8% rich to the at the money this week. So bids to the upside here in the beans. Mr. Nick, this kind of reminds me of way back in the day, in the early days. I don't think we're quite there yet, but in the early days of TWIFO, remember we had a lot of favorable setups for collars in the soybeans, where the puts were cheap, the calls were bid, and you can put on collars for very, very attractive levels. I don't think we're quite there yet, but this is kind of reminiscent of those days. Would you agree, Mr. Nick?
Yeah, I mean, it is pretty wide, and what we can do here is I can also introduce another tool that we have available now, and this is part of a new section that we released recently called Ask QS. So you ask QS, so basically you can ask QS questions, and get your answers pretty easily. You can't literally type it in, but it's more related to trade. But we have a tool called the Quick DNA tool. So it's like a market DNA tool. But I can take a look and just click a few buttons and see where the skew is in relation to, a historical time frame, right? So right now, it might look like it's a bit wide from just from seeing one's 10% rich and the other one's 10% cheap, but it's really only in the second standard deviation. So not even between the first and second standard deviation away from the mean over the last year or two. So we've seen much wider. Remember, when we first started, we had all that terrible rain in South America, right? I think that's what really caused things to go berserk, where the calls were super, super bid and the puts were just hammered. But it is definitely a little bit of a gap between the two, but it's not anywhere near necessarily it's been or where it could have been. So still, I don't know if it's wide enough to get so excited about it, but it's definitely it looks. I'm going to put a chart into the chat so you can take a look at it, and you can maybe push this out and show what it looks like. But it gives a real nice, quick look, and basically what it's telling us is that we can look at these dots. We don't necessarily have to know what the dots mean. We can click on the dots and get information about the dots, but it's going to tell you, hey, is there anything worth looking at in this market right now that might be tradable? So you can either look for something that's really narrow, meaning maybe everything's sort of quiet, and I want to do something from a quiet market standpoint, or things are berserk and it's gone really, really out of whack, and I might want to take a trade that's going to put it back into whack. So yeah, see the calls bid, puts offered, but not quite as crazy as it's been over the last couple of years.
I like it. You certainly have been busy, sir, in your time off, creating all sorts of funky new tools. I'm just looking at this quick DNA. I like that. The skew history. You got corn here. You got wheat. You got the beans. You got a whole ag complex going up here. So we'll tweet that out for you, listeners. I'm sure Nick will have it out there as well. So if you follow along, you can see it for yourself. So, of course, play along the home game. Head on over to the /TWIFO, and you can play along for yourself, or quickstrike.net. Sign up, kick the tires, and light the fire. So, yeah, Mr. Nick, I'm glad to see you haven't been just sitting on your hands out there. So you've actually been cranking away on some interesting stuff, Nick.
Well, the guys have been. I might have been sitting on my hands. The guys haven't been. So, it's how it is. We had a nice break here with all the kids home from college. I'm sure Sean felt the same way. So this was I took it kind of easy over the holidays, but we're back in action, and we did a lot of this stuff. We released a lot of this before the end of the year, but there's some good stuff here. The Globex tool is I think people are going to really, really love that, because you chose the top 20. You can go by top 25, 50, 100, whatever. You can look at individual symbol within a product and then all the symbols in the product, but it's going to be a really, really nice, simple way to take a look at things. I'm excited, and I think people should be excited, because CME's like letting some information out there that hasn't necessarily been out there in a long time, the Globex trades in particular.
All right, Mr. Nick. I want to get to the listener questions. We got time for probably one more product complex before we get there. So you're our guest this week. I'll let you pick, sir. Where should we hang our hat next? The broad spectrum, all the Globex. What do you want to talk about?
Yep, here I am. I'm unmuted. I think, let's see. I think that we might as well, since I'm on, we could take a look at the rates, right? What do you think about that?
I already pulled it up. It's like I knew where you were going. How did I know you were going to say? You'll be happy to know, in your stead, Mr. Nick, your buddy Mr. Rhodes over there, now at Tab Group, has been quite the advocate for rates in your absence. So it's not just you.
Sure. Yeah, that's good.
I tried to make Sean talk about rates, and he refuses steadfastly. But so I blame him mostly.
I talk about Eurodollar strikes and massive volume and single strikes. We've been bringing it up almost on every show.
Yeah, it's what's happened in there. we had a lot of volatility for a while, right? For that period of time, and we had some odd skew in the euros a few months ago where the calls were super bid and the puts were offered, and that's a significant thing from a standpoint of they were cheap in both Black-Scholes terms as well as basis point volatility terms, in yield terms. Now they've sort of, now it's more of a smile look in the skew here, and you don't necessarily see that all the time in the euros, but that's kind of where we are at this point. So what's interesting, there are some, the vol is low in the euros, so there are probably some opportunity. It's not as low as it was maybe a few weeks ago, but the vol is low, and the curve doesn't necessarily look like it usually, and I say that, I put that in quotes, like it usually looks around here. So there's definitely probably, and there's some opportunity there for, puts were cheap for a long time, and that if you were talking to me, I was looking at, doing put ladders or put 1x3s or, or selling a call spread against the put, that kind of thing. So volumes are always massive and huge, and us that started we that started in that pit, we're just a little bit spoiled in terms of seeing 1,000 lots and 10,000. I mean, if you look at some of the trades, and Globex is not even the primary market for this thing. There's massive trades. So it's very liquid. I think there's a lot of good opportunity. I think there's a lot of cheap puts in those short-dated options. March puts were dirt cheap. Now we're getting a little closer to the March expirations, but I think that there's plenty of opportunity in the June contract as well. So, when you look at this, let's look at the March contract. It's got 60 days, and we haven't even had any stupid tweets from the commander-in-chief. So you got a straddle that's worth, between 5 and 6 ticks. Okay, now, we've been in a tight range for a period of time, and it's a 18 ball, but you're getting a put that has 60 days left. You can get it for 3/8 of a tick. It's just insane stuff going on in those downside. You got just cheapo out of the monies across the board here. So I think it's definitely worth paying attention and looking even try to get 2 puts by financing with 1, all kinds of things out there. So there's a lot of fun stuff in the Eurodollars. I mean, if I traded that stuff, I know what I'd be doing, but I just like to talk about it, and I give ideas out as I can. And there's some cheap options out there in the euros right now.
If ever there was a product, Nick, in the history of time that called out for even more tools and more ways to analyze it and parse it, I'm looking at the numbers right now, 3 million contracts on the tape for the Eurodollar. It's so hard for a large chunk of the audience to come in if you're not living in this and breathing this day to day to even come to grips with volume numbers that are that astronomical. We're just talking soybeans. You're talking a couple 100,000 contracts. Talking gold. You're talking that similar level, maybe less. WTI maybe a little bit more. You're talking Eurodollar. It's 3 million contracts. So it's definitely a product that cries out for even more tools to help parse. And you mentioned at the top of the show you got some new Eurodollar tools up your sleeve. Anything you want to share with us, sir?
Yeah, well, I mean, I just pushed another picture to you. I mean, well, here's an example. So on Globex, a 2 1/4 tick put spread hedged with a 20 delta traded 26,000 times today on Globex. Now, if it's trading on Globex that many times, you got to, and that was like 10,000 traded, well, actually almost 20,000 traded before the open. Or these all traded last night before the open. How about that? So between 6:08 and 6:12, we got 26,000 on Globex, which means that when you came in on the pit, right, more of that stuff had to happen. So the tools there for the tools you should be looking at for the Eurodollars is sort of looking at historical, you look at the skew, but you really want to have a good idea not only of the skew but what levels of volatility is right now. And another thing to look at out there is you can tell, and Sean knows this from a long time ago too, that market it's easy for strikes to get bashed and people to get lulled to sleep with the low volatility. So you saw for a period of time over last month, you got a lot of strikes that got bashed, beat down really bad, and they really shouldn't have been that cheap. And you had an opportunity to do some ladders and some condors that were really benefiting you. Now what you got to look at is what's the absolute vol level and what's the skew look like. So I think there's some good opportunities out there, and it's a ton of liquidity. So you can, a quarter tick wide trades 30,000. It's there to trade. So. Yeah, those are the tools. I think it's the Globex is looking at the skew. We have great historical data for that, so that's the stuff you should look at. And I think the best thing, and I don't think I mentioned this yet, and I sound like a commercial today, but one part of Ask QS, we have this new piece in there. It's called Quick Script, and what you can basically do here for any contract is you can go in and type in what we call a generic. So you could say, give me the March 20 Delta risk reversal, and it will go and find the strikes for you and price it up and show you what that things look like over time. What it'll also do is it gives you all the charts from a P&L standpoint, gives you the historicals. It'll give you, so if it's a 30-day option, it'll give you all the seasonal versions of that all the way back. So if it's a March contract, it'll give you March contracts all the way back for 12 years. So there's a lot of cool stuff there, and the generics is probably what I'm most excited about because a lot of people trading the Eurodollars want to go look at for instance, in late November, I got a lot of requests people were looking for not just necessarily a delta-based risk reversal, but they said, I want 1, 2, 3, and 4 strike risk reversals around the money, hedged at the money. So that was their way. That was a new way that people were looking at skew, not just at the vol difference between it, but they wanted to see the skew from a price difference. So are the calls rich or cheap? So if it was plus, the calls were rich, and if it was cheap, the calls were, the price was positive or negative. Negative means puts were rich, and positive means calls were. So people were clamoring for tools like that. So we built some tools that gave them the ability to look at skew that way, and what caused further then. So, if the market was moving a lot, those strikes changed. So what we did too is we created some script that let you go like ATM times 3, and it would go 3 strikes around at the money and hedge it with the future at the money. So there's a lot of great ways, there's more there. We thought we were stuffing 5 pounds of crap in a 1 pound bag before. There's 7 pounds a bag in a 1 pound bag now. So take a look if you get a chance and reach out. And
that's a lot of crap. It's a lot of crap in the bag. A lot of crap in the bag from Quick Strike. New marketing slogan, crap in a bag. From Quick Strike. All right, we got to keep on rolling. Hopefully your questions aren't crap. Hopefully they got some good ones. As it's time now for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody. Welcome to your segment, the Futures Options Feedback segment. Let's dive right into it. A lot of you guys got crypto on the brain. We'll get to that in a second. Let's kick things off here with Tamish. He's got one for you, Sean. Hopefully you got your question answering pants on. Tamish wants to know, he says, the FTSE rep on the program, I'm guessing that's you, Sean. I don't think there's been any others. The FTSE rep on the program mentioned the strong international demand for RUT options and futures. This surprised me because the index is primarily domestic. What are the biggest international markets for the Russell 2000? Well, this is a sentiment I've expressed to you in the past as well, Sean. It is kind of always fascinating to me to see when you mention international demand. It's always fascinating to me that all these international audiences are interested in what is effectively a small cap domestic index, which is, to me, kind of interesting. So what do you have to say here for Mr. Tamish here, Sean? Where's all this international flow? Where's it coming from?
It's a great question, and Tamish, I'm actually excited to answer it, and I hope it's the answer you want to hear. But our exchange partners have done such a great job of bringing global awareness to their product suites, especially in equities. The equity team at CME Group and SIBO have just done a phenomenal job in terms of bringing awareness to a real domestic play in the United States, and it's a way to invest in a U.S. market. And the Russell 2000 being small cap stocks and being U.S. domestic is that strategy. It's that trade. And to talk about where the flows are coming from, as CME's distribution is truly global, they have volumes trading in the Russell 2000 coming from every region, the APAC, the Europe and Middle East, Latin America, and North America. More than 10, almost 15% of volumes come out of the EMEA, Europe and Middle East. 3 to 5% come out of Asia. It's really exciting, and you don't have to have obviously with these volumes, the cash equities are closed, but yet you have such liquidity in these futures, and the correlations across other equity products give this index enough volatility overnight for there to be liquid activity to trade the market, and it does. It trades. So I hope that answers Tamisha's question.
There you go, Mr. or perhaps Mrs. Tamisha. Good questions here. Listen, a lot of you guys got crypto on the brain. We'll get to a few of them here. A lot of people were asking, leading into the much ballyhooed launch of the options on Monday, how is that going to impact overall price of Bitcoin? We know the futures led to a sell-off. Would the options maybe be the opposite? Would it lead to a rally? Some people were predicting that. Listener here, Cedric Rogers says, I will say, based on the history of past results, that the answer is no. It will go lower. And when that didn't materialize a day or so later, he chimed back in. I like our listeners. They have integrity. He says, and I might add, I was completely wrong, and I will own up to it. I can't be right all the time. Well, none of us can, Cedric, but glad to hear that you're standing behind your predictions. And when they don't go your way, you own up to it. I like that. I like to see that in our audience. All right, Zachy wants to know, any idea when we will have some regulatory clarity on crypto? Zachy, we've been doing that crypto show for about a year now. And we've had some commissioners from the SEC on that show to discuss that topic. And I still don't know at the end of the year, beginning of this new year and decade, if we have a lot more regulatory clarity on crypto than when we started. That's why I say it's important to have these listed, regulated products succeed and get some volume and some traction behind them. Because then the regulators can see that there is interest and demand for these things, and they can exist in the broad capital market ecosystem that we have here in the U.S. You don't have to just tunnel in to a Binance or a BitMEX or a Deribit to get these things done. You can do them here. So that's an important, I think, cog in the machine, and we're still waiting. So I encourage you, go back and check out my conversation with Hester Peirce, a.k.a. the Crypto Mom from the SEC. We talked about some of these things, but a lot of it is still in flux. We don't have an ETF. We don't have all these other things people have been waiting for some time. We don't even really have a lot of approval for a lot of lit products in the U.S. yet. So I don't think we really have a lot of regulatory clarity. When we will have some, I'll go out on a limb. I'll say this. I'll say as the year progresses, if we see a lot more volume materializing in these CME contracts, maybe some of the other ones as well that are listed here in the U.S., then maybe that will start to drive some action, and maybe by the end of the year we'll see some clarity. So I'll go out on a limb and give you a little bit of that time frame, but it's still so fluid that, and of course we have our election coming up, so that could change the makeup of what's going on at the SEC. That could change the priorities. So there's a lot of unknowns flirting around out there, Zachy. But so yeah, unfortunately, I wish I had some better news for you, but we're not seeing this. Nick, this is kind of what we were talking about at the top of the show here. Neil says, do you have any thoughts on the early CME Bitcoin options volume? It seems somewhat light to me. And yeah, you're right. Overall, we're just talking Eurodollars, right? 3 million contracts. It sure as heck wasn't that. It was 54 contracts to start the day. But still, it seemed decent. Nick, you seem like you had a more optimistic take on it. What do you have to say here for our listener, Neil, who was maybe a little bit dismayed by the early volume numbers, Nick?
Well, I think there's two things I can probably kill the next one from Jack, too, at the same time.
Go for it.
I think there's two ways to look at it. The positive thing is the contract sizes, the number of contracts that traded were based on what's there in the bid offer. So if you're getting one lot's based on a 3, 4, or 5 up market, you're getting, 20, 30, 40% of the bidder offer is getting lifted, right? So that's fine. So and it's still new, right? We got to see how the future's moving, but it's volume. The strikes are opening. The volatility levels are getting created as those become historical volatilities, people can start to take a look at it, and maybe people start going back and looking. You know, what's going to be important is we talked about the realized vol earlier, right? So that gives us an idea of what potentially the at-the-money vol is. So if that starts to make sense and we start to see some pickup in that, and then depending on what direction it is, then you start seeing maybe some more bids or some more trade in the upside if the market looks like it's going up, or in the opposite for the downside if the market looks like it's going down. So it's got to start somewhere. So those small numbers are, everybody wants to see bigger numbers. But leading into that is the contract side. It's 5 coins. So 5 coins times, $8,000, $9,000. It's a $45,000 contract. It's pretty expensive. And then to talk about what Jack said, he goes, why does everyone quote crypto and notional? The trick when you're quoting crypto and notional is because notional makes it look like a bigger number, right? So the contract size times the number of contracts is going to give you a bigger dollar value. So I found that funny too, Jack, because I was looking at it. It says Bitcoin trades $2.3 million in options this week, and I kind of laughed. I'm like, that's a way of, if they traded 2 million option contracts, you wouldn't have them talking about $1 trillion in notional. I don't think you would hear 2 million option contracts. So it's just a way to generate interest from a high number standpoint until the volumes get up there.
That was kind of funny to see. There were a lot of crypto outlets and blogs this week who were writing these, slavishly praising article. 2.4 million notional goes up on the CME. Tremendous demand. I was like, it's 54 contracts, guys. Let's keep it in perspective. You're right, Jack. That's Jack asked, just for clarification, listeners. Jack asked, why does everyone quote crypto notional? Even CME is doing it now. And you're right, because most of these venues, we talk about them all the time in the crypto show, they don't really have a lot of paper. So it sounds a heck of a lot cooler to say X million dollars worth of notional traded than 84 contracts. That's why. That's another reason why I hope all these contracts succeed, so we can get rid of that outmoded notion. That is kind of de rigueur. It's the way it's done in the crypto space, and I hate it. It drives me crazy. Tell me the contracts that traded. Don't tell me this ridiculous notional. Granted, the CME contract is a beefy one, but still, stop messing around with this notional. So I'm with you there, Jack. Hopefully we see more numbers come into the space, and that ridiculous trend will come to an end. All right, Sean, we got more here. We got more FTSE Russell. So I hope you didn't take those question answering pants off. If you did, put them back on here. We got a question from 5 Round. 5 Round wants to know, are covered calls as popular in RUT as they are in the S&P? Obviously, we all know everyone likes a good covered call in the S&P, doing overwrites, all that fun stuff. They like buying some puts as well, hence the skew we see out there. Mr. Sean, what do you have to say for 5 Round, who wants to know, is that trade as popular in Russell 2000 land as it is in the S&P 500?
They're extremely popular in RUT options, and that's because there's the Russell 2000 is a volatile index, and with a volatile index, you get volatility values in the options, and what better than to harvest that volatility? There's buy right options, there's put right strategies, and there's actually some indices that the CBOE calculates on a buy right index and put right index to be able to harvest that volatility with an index value. So you can look at those as examples, but absolutely, call writing is definitely an extremely popular strategy within the RUT options over at CBOE.
All right, listeners. Unfortunately, that music means we've come to the end of an epic journey. Man, an hour flies by when we're talking all things RUT and Bitcoin and soybeans and everything else. Even a little bit of Eurodollars squeaking in there on the show this week. So all you rates fans out there, you'll be happy. Got a little bit of your flavor. But before we go, let me go back around the horn. Let me start with our guest, Mr. Nicholas J. himself, a.k.a. the head of SHIELD, a.k.a. the head of QuickStrike. Nick, you kind of gave us a great tour of all your new offerings in QuickStrike land here. But before you go, anything else you want to leave our audience with? Any cool tools, any cool teases you want to leave them with? Now is the time, sir. The floor is yours.
I think I just throw out there that, we have a new add-on that's called Quick Research, and it includes the script tool that I talked about where you can type in any trade and it will price it for you. Type in any generic, it'll price it for you. Got tons of historical associated with that in charting. The DNA tool, which lets you look at the market DNA, where the volatilities are, and it plots them against the Z-score or standard deviation over time. The other thing I didn't mention is we now have an alerts tool. So you can actually go out there and say, hey, I built this spread. I want to know when it hits 5 or when it goes down to 2. So you can put something on or watch something and get alerted that way. But you can also get alerted to futures volume and open interest, options volume and open interest, any kind of volatility level that we have in store. So there's a lot of good stuff out there. Those things aren't free. Those come as part of a package, but it's definitely worth looking into. If you're trading, like Mark always said, time to look here.
If you're trading this stuff, I have said it before, I'll say it again. I don't know, and you're not looking at QuickStrike. I don't know how you're doing it. QuickStrike.net, the place to go to kick the tires, light the fires. BANTIX.com also works. If you want to try it out, try before you buy. CMEGroup.com/TWIFO, good place to go to kick the tires and try out a lot of these tools for yourself before you upgrade to the old Pro version. And Mr. Sean, we kind of just mentioned the buy rights, all the other cool data you guys have cooking. If folks want to learn more about all this good data coming out of FTSE Russell land, maybe they want to reach out to you with some of these questions about covered calls in the Russell and all this good stuff. Where should they go? What should they do, Sean?
Just reach out to me at smith@FTSERussell.com, smith@FTSERussell.com. Happy to answer your questions, happy to have a conversation with you. Just reach out to me. Happy to do it. And I'm excited to see the volumes pick up, the open interest pick up in the options, and I love getting the Russell option questions on the show, so keep them coming.
Keep them coming. You know where to find them, fsmith@FTSERussell.com. We're just here every week, every Thursday, 1:30 p.m., 2:30 p.m. Eastern. And on behalf of Sean and Mr. Nick and our friends over there at CME, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for hitting us up all week about the crypto options. We hear you. We love your interest in them too. And for everything else you sent in, keep those questions coming. And we'll see you back here tomorrow for Volatility Views, 1 p.m. Central, 2 p.m. Eastern. We're off on Monday for the Martin Luther King holiday, but then we'll be back again on Thursday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.